Hey everybody, welcome to the Millionaires Club. Millionaires Club is where future millionaires come to learn and enjoy. If you're new here, be sure to subscribe and hit the bell button to get notifications for new videos. And now, what stocks are the rich people buying right now? The stock markets rose almost 80% from their lows in March 2020 to the end of FY21, making it one of the most eventful years in history. Despite the pandemic, given the challenges at the bottom of the pyramid, the upward trend in momentum has come as a relief to some and a surprise to many. Markets, on the other hand, made money for all those who were invested prior to the outbreak. Fundamentally strong, risky, and cyclical, all themes have played out at some point in the last year. But fears of a second wave are now real, and with interest rates already at rock bottom, investors should look for stocks that are more resilient and can withstand difficult times if things start to get worse. A basket approach that includes a diverse mix of high-quality stocks can help absorb short-term losses while also providing good risk-adjusted returns. If stocks are held for a longer period of time, the power of compounding can also be seen. Being patient is the key to a successful investor. You should let your profits run and not cut them short unless you're in desperate need of cash. When we own portions of outstanding businesses with outstanding managements, our favorite holding period is forever, Warren Buffett correctly states. Stock selection should prioritize companies with efficient leverage, higher operating and free cash flows, a strong cash conversion cycle, and a solid track record of ROEs and ROCEs. Secular stocks are investments that can be made for the long term, whereas cyclical stocks can be held for 1 to 3 years. The stocks listed below have the potential to weather storms and emerge victorious from the pandemic. With a runway of opportunities ahead, these 10 names can generate healthy returns for an investor if purchased in a basket approach and held for the long term. Number 1. Larsen & Toubro. L&T is a major beneficiary of the various infrastructure proposals announced in the recent budget, and the company has demonstrated not only excellent execution, but also financial strength and value creation over the years. Over the last 10 years, the company has consistently delivered ROEs of 14%, with operating margins of more than 15%. Nonetheless, it continues to trade at attractive valuations, with a PE of less than 15 times, making it an appealing value buy. Number 2. Dr. Reddy's. With the rise of COVID-19 cases and the need for medical assistance, demand for drugs has skyrocketed, boosting sales of players such as Dr. Reddy's, which has been a consistent performer, delivering stable net profit growth at a 14% CAGR over the last 10 years. Pharma stocks have been underperformers in recent years, but with a number of tailwinds on their side, things appear to be looking up, particularly for this stock. Number 3. Dr. Lal PathLabs. Dr. Lal PathLabs too has been witnessing a rise in testing diagnostic volumes around COVID-19. But had it not been for COVID, it would have still performed well, given that it's been a consistent cash flow generator and has delivered ROCEs in excess of 30%. Number 4. VENTA Organics. Growth in specialty chemical stocks has recently trended in line with rising pharma. With China at a disadvantage, India's exports have increased, and VENTA Organics is a strong contender as a leading producer of IBB. Over the last 10 years, it has delivered ROCEs of more than 35%, while growing profits at a CAGR of 24%. Number 5. Petalite Limited. In the chemicals industry, Petalite Limited has also been a promising player. In both industrial and consumer adhesives, as well as related solutions, the corporation has a near monopoly. It has successfully utilized its position to provide outstanding shareholder returns on a consistent basis, and it could be a nice addition to your portfolio. Number 6. Coforge. A mid-cap IT player like Coforge, which has been steadily growing its contract wins and ramping up on acquisitions to strengthen its skills in the BPM and digital solutions market, can be a smart addition to your defensives in your portfolio, benefiting shareholders. With the tech upcycle in place, quality businesses like Coforge should be able to continue generating great long-term returns to shareholders. Number 7. Kodak Mahindra Bank. During the pandemic, the government made efficient measures to guarantee that businesses had access to loans. In reality, in order to provide relief to borrowers, the RBI cut interest rates and declared moratoriums. While this was a great step, many institutions were wary and made adequate arrangements to protect their assets. One such bank, Kodak Mahindra Bank, obtained cash at the outset of the pandemic and has been particularly cautious in its lending. It has routinely delivered a 20% CAGR increase in profits over the last 10 years while maintaining the quality of its book. Number 8. HDFC Limited. HDFC Limited is another company that has benefited from decreasing interest rates. This NBFC is a true leader because it has a strong brand, an experienced leadership team, and a large loan market share. Number 9. SBI Life Insurance. Insurance is another topic that has recently gained traction and offers tremendous development potential due to its underserved nature. SBI Life Insurance, after LIC, is one of the finest private insurance players with a leading APE growth of 20% or more. Because it offers a wide range of products, the company has a large market share and continues to grow. Players like SBI Life are sure to benefit now that FDI limits in insurance have been increased. Number 10. CDSL. Demat accounts have experienced a spike in the past year as many people were compelled to stay at home due to the shutdown. With the increased interest in the stock market, CDSL will continue to grow and prosper as a depository. CDSL has built a solid market for itself as part of a duopoly within SDL and will continue to grow revenue as markets mature and volumes increase. A portfolio of 10 fundamentally solid stocks could help you build wealth over time. Usually, a lengthy list of securities is not a sign of the intelligent investor, but of one who is unsure of himself, says Philip Fisher. Investors should stay invested and secure in this pandemic if they follow this attitude. What stocks do you think are worth investing in right now? Do you want to include these stocks in your assets? If you liked today's video, be sure to like and subscribe if you haven't already, and let us know down in the comments if there are any other ways to become a billionaire that we haven't covered, and also if there's any subject you want us to cover in our future videos.